What's going on, guys? My name is Tyler. Welcome back to the channel. I'm glad you guys can join me today. We are talking about what is the better buy, NIO or Lucid Motors. So this is a tough question. I'm going to give some clarity to the situation, but before we get into it, I'm not even going to ask you guys to like or subscribe. What I will ask you to do is comment down below. Let me know which one you guys like more. Which one do you own? I personally own both, so I'll be the first to tell you guys that, but let me know down below what you guys feel about these companies. Now that you guys have commented your opinions down below, I don't want to waste any of your guys' time. Let's get to it. All for transparency's sake, I will show you guys my position in NIO and CCIV. First off, I do own 100.66 shares of NIO at an average cost basis of $48.20. It is 14.52% of my account in just the shares. Now, as far as the options, I have total 5 options at $2,913. So I am very bullish on NIO, as you can tell, but now I'm going to show you guys CCIV. I do own 83 shares of CCIV at an average cost of $24.66, and it makes up 7.47% of my portfolio, currently up almost 9%, so not too much. I did make a video. I sold some of my CCIV at $55 a share, made a video about it. It got so much hate, so I will link that up here so you guys can take a look at that for all joke's sake, because it dropped 45% 2 days later. So we're just calling it out how it is, and if you don't like it, you don't like it. Now, first thing I want to address is the valuation concerns that I have regarding comparing NIO and CCIV. Now, NIO delivered over 43,000 vehicles in 2020. And NIO currently has a market cap of over $71 billion, which may sound expensive to you guys comparing them to other legacy automakers, but it actually is not expensive at all. Let me explain this to you guys a little bit more in detail. Now, NIO is the 5th largest automaker in the world. They are ahead of companies like General Motors, Ferrari, BMW, Honda, Volvo, all these other companies. 1, because they are EV. 2, because these companies have not innovated enough for the future, and everybody knows that EV vehicles are the future. And 3, because legacy automakers, while they do sell a lot of vehicles, they have extremely low margins. Now, let me show you guys this. In this article, it says margins in the legacy automaker industry have bordered on zero for years. Cutthroat competition and inefficient dealer networks drove profits to the ground. Even though the global automotive sector generates more than $5 trillion in sales annually, legacy automakers combined are barely worth $1.5 trillion combined. The 0.3 times price to sales ratios put automakers on par with sunset industries such as metals and mining. Lucid and other luxury EV makers look to change that. Instead of competing on price alone, these companies have added in features and engine power that have left even its fiercest critics admitting it doesn't feel like anything else. It doesn't go like anything else. It's fabulous. Buyers have responded by opening their wallets and paying the premium. With Tesla, analysts now expect that the firm will generate a 5.3% net margin in 2022, 4 times greater than Ford's recent average. Put another way, if Lucid achieves just a 10% margin, example 10 times higher than Ford, the EV startup could theoretically produce a tenth of the cars and still achieve the same or greater market value. Now that you guys understand why the EV vehicle market is valued so highly compared to legacy automakers that sell gasoline vehicles, is because obviously they make more money and have higher margins than gas vehicles. They usually have their own distribution centers, all that. Now I'm going to get into some of the concerns I have with Lucid Motors valuation. Now, first off, before I give you guys my concerns about Lucid Motors valuation, I want to be very clear. Like I have already shown, I own Lucid Motors, so I am very bullish on them, and I do have more good things to say about Lucid Motors than I have bad things about Lucid Motors. But this is a stock that you add to over time. If you have $1,000 to put into Lucid Motors, I would put $200 in every month and space it out so you average in and get the best deal. Now, after this merger, we could sell off. That is one of my concerns. The other concern I have is with the valuation. The valuation on Lucid Motors sits at $47 billion. So if you look on sites like Robinhood or Webull, any of that, it shows a lot smaller of a market cap. So newer investors can be getting fooled by this. And my problem with the $47 billion valuation right now is that investors have it in their mind that they will deliver 30,000 vehicles in their first year, like they have said themselves. Now, Other sites, other reliable information has come out that they will probably only produce 6,000 to 7,000 vehicles if all goes well. As we know though, there is no such thing as a perfect vehicle company startup. What they say in the first year is always generous given what they will produce in the first year. So this has investors with a super high standard. I mean, just look at Tesla. They were not doing so well up until the last couple of years. Even though we all love Tesla, that is the truth. That is specifically why I say you should not go all in on CCIV, Lucid Motors, whatever you want to call it, right now. I would wait, I would space it out because the expectations are just a little bit too high. And my theory about the valuation being too high comes up in articles all the time. So I do want to show you guys this article. It says, meanwhile, Lucid looks primed for phenomenal growth. While the firm's rosy estimates will likely prove too high, the startup has already secured more than $500 million in pre-orders. So that is clearly positive, and this is a positive article overall. That is really what I wanted to point out to you guys. Now I want to go back to why I prefer buying NIO right now over Lucid Motors. Number one, China boasts the largest EV market, while Norway has the highest share of electric cars in total passenger car sales. In Europe, several EV markets saw triple-digit growth in 2020 electric vehicle sales. Although the US has the third largest EV market, growth only reached 4% last year. Now, I'm really going to convince you guys with NIO's latest earnings report because it is phenomenal and will show you guys the clear winner out of Lucid Motors and NIO. Q4 revenues reach US dollars 1,017.8 million, up by 46.7%. Annual revenues reach US dollars 2.5 billion. So this company is starting to make phenomenal returns and revenue on their investments. I'm going to read you guys the Q4 summary as well. I don't want to go over the whole thing, but I think this points out the true value of NIO. So it says, NIO's mixed report sent shares tumbling as the market looked to be reacting to commentary on production run rates and supply constraints. However, NIO has multiple positives this year as battery/chip constraints are expected to ease by Q2 ahead of European expansion. So they have announced that they will be expanding into Europe later this year, which is the number 2 biggest overall EV market. Now, it says deliveries could still be set to reach 95,000 to 100,000 units for fiscal year 2021 and 160 to 190,000 units by full year 2022 under production capacity expansion. Strong revenue growth stemming from value growth and additional services provides an attractive valuation backdrop similar to Tesla's China segment. Says NIO failed to impress with Q4 results, posting a mixed report. However, reading further into the report as well as within larger trends in the economy still reiterate a positive outlook for 2021, with the broader market sinking through February as rising rates hit high growth stocks hard. NIO's valuation has shrunk by nearly 1/4, providing an attractive entry port on an upbeat view. Now, after this video, you guys should have a great understanding of where the valuation sits with these companies. Now, I do like both of them. There's good and bad with each one. But if you just look at the $47 billion valuation on CCIV and the $71 billion valuation on NIO and the difference in vehicles they are producing with similar margins, I think it is fair to say NIO is a better buy right now. And the fact NIO has announced they will be entering the European market by the end of 2021, this could rapidly increase growth at NIO. So that is not to say NIO will always be the better company to buy. I don't know if that's the case. I'm not going to go that far to say that. I do think CCIV has a great shot of rivaling Tesla, NIO, and any other automaker. They could even be number 2 in the end. But if I were you guys, like I am doing, I am buying both because I love both companies. I love the products at these companies and fully understand both companies. That's all I got for this video. Make sure you guys leave your opinions down below on which one you like better, CCIV, NIO, maybe Xpeng, Tesla, any of that. Let me know down below in the comments, as well as if you guys stay to the end of this video and you guys are listening to this, I have a Discord link in the description. This is for you guys that stuck through the video and actually want to learn. I don't want a lot of people over there that don't want to learn and put in the time to learn this stuff. So if that's something that you guys would be interested in, make sure to join the Discord. It's free. I send out all of my buy and sell alerts for stocks and options, so there's no reason to not be over there as well. But I hope you guys enjoy the rest of your weekend. I'm going to get out of here. I will see you guys later. Peace out.